The following session is not to be treated as personal advice. MFX plan provides general advice only. That does not take into account your personal objectives, financial situation, or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets.
Welcome traders. In this session we'll go through how traders are using these key levels to be placing their trades. The first thing we need to do is select your key level template so it's up on your chart. And in short, pivot points are basing off pivot points and resistance and support. So you do have the R1, R2 and R3. And below the pivot point you've got the S1, S2 and S3. And they're known as the support levels. So these are all significant levels where traders look to into entering trades. We can see here, for example, the price has actually moved bearishly into the pivot point and traded underneath it. And it's actually stopped there and traded below it. So this could be an actual opportunity for a trader to enter a trade. Placing a stop loss by using the horizontal line just above a pivot point is where a trader may put their stop loss, and a take profit just slightly above the first support for a very quick trade. You can see here already, just by eyeing it off, it gives you a really attractive risk-reward ratio. But let's actually use the open position calculator to see exactly how much that is. When you're using the calculator, make sure you are selecting the correct pair. Here in this trade example, we are using the euro-pound pair. Now in this example, I'll be selecting a pending sell so we can mimic what the trade would have looked like if a trader actually placed a trade. So I'm going to put the pivot point price in here, and with your stop loss you can see already using that horizontal line you have the value there. So you just need to tick the box and enter those values in for the stop loss. Here you've got there on the chart already, so it's 89511. And of course for your take profit you also have the value there from the line you put in previously, and that value here is 88360. Once you have entered your stop loss and take profit, you can see your trade here. So you're risking just about 17 pips for a potential to make 98 pips. The risk is very low at the moment, -$2, because the last thing you need to do is actually change the volume relative to how much risk you like to take on the trade itself. So typically traders put a percentage of their account, sometimes 2, 3, maybe 5%, and they're choosing that. It's all related to the actual risk tolerance. If they want to risk more on the trade, then they can. It's always up to them. So you can see here, the trade actually doesn't change. It's all about the volume. And once it's done, you of course press place trade. If you decide to trade the strategy, it's very important to remember that if it's trading below a pivot point, then that's giving the trader a signal to sell. If it's trading above a pivot point, then that is giving a trader a signal to be buying. Also scan the market by clicking the currency pairs and dragging onto the chart and looking for the price to near a pivot point. Keep in mind you will take losses. It's all about the risk reward. Thanks for watching.
Take the next step to financial freedom with myfxplan.com. Exceptional service perfected.